Nation, world's sixth largest economy, a global hub for innovation with one of the largest startup ecosystem. India, city of Mumbai on the western coast of Arabian Sea, among the most advanced and modern metropolises in the world, and the financial capital of India, gears up to host the most prestigious accountancy event of the world, 21st World Congress of Accountants from 18th to 21st November 2022, an event held every 4 years. The Olympic of Accountancy Profession. India hosts the event for the first time in 118 years since the WCOA came into being in 1904. Around 10,000 delegates expected to join virtually. More than 6,000 delegates from over 135 countries would congregate to exchange views at the world's most advanced Geo World Convention Center. The theme, Building Trust, Enabling Sustainability, will inspire the future of accountancy profession to create sustainable economies for the future.
The ICAI is honored to be the host for this mega event, which will bring together the world's largest conglomeration of professional accountants, regulators, leaders, and visionaries to advance the cause of the global accountancy profession. Now, with the ease of travel restrictions across the world and the situation returning to normal, we are working towards creating a never before and a unique experience for all our delegates. The year 2022 marks the 75th year of India's independence, and the Government of India is celebrating the year in a big way to showcase the glorious history of India. World Congress of Accountants 2022 would also be celebrated as a mega event to showcase the important role that the accountancy profession has been playing in the economic and social development of the country.
A never before witnessed unique experience of learning future trends, emerging avenues, enhancing skill sets, networking, and to explore the incredible India awaits you.
We at ICAI are pleased to host you here in Mumbai, the financial capital of India, for the 21st World Congress of Accountants with the theme Building Trust, Enabling Sustainability from November 18 to 21, 2022, and give you a professionally enriching and personally rejuvenating experience. We are hopeful that the conference shall be stimulating and productive, and your stay in India will be a memorable experience. Once again, we invite you for this enthralling convergence in India, the land of multicultural, historical, and spiritual inheritance since centuries.
Insights from the stalwarts of the profession, international and national standard setters, regulators, and trendsetters will constitute the panel of speakers at WCOA 2022. Let your dream get bigger. Come, be a part of this mega celebration. For registration and sponsorship opportunities, contact. Organized by Institute of Chartered Accountants of India under the aegis of IFAC.
We are delighted to welcome you all in the VCM being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for this session of VCM on opportunities in financial system space and financial literacy for CAs. In a short while, we will start this VCM. I would like to apprise you about CPE committee. The profession of chartered accountancy has always been recognized for the quality of education, training, and strong grip over technical standards. With globalization and increasing business complexities, it is essential that chartered accountants equip themselves with the changes occurring and stand out to the expectations of the society. Our institute is constantly working and contributing to cater to the needs and requirements of our members and has taken various initiatives for them from time to time in the direction. With this view, the Continuing Professional Education CPE Committee of ICI has always been the foremost to provide opportunities to their members to boost their knowledge base. It is a pleasure for us to have our Vice Chairman CA Gyanchandra Misra sir among us. CA Gyanchandra Misra sir is fellow member of ICAI, associate member of ICSI, LLB and insolvency professional. He is serving the Institute of Chartered Accountants of India in various capacities since 2010. Presently, he is serving the ICAI as Central Council member. He is Vice Chairman of CPE Committee, Internal Audit Standards Board, and Committee on Management Accounting. He is also member of Examination Committee. He possesses about 25 years of proven professional track record and has been instrumental in contributing towards the cause of social welfare as well. He has served as a speaker and resource person at various forums and delivered lectures on various topics. With these words of mine, I request CA Gyan Chandra Misra sir to give welcome address to all. I think Gyan Chandra sir is not here. Is Vice Chairman sir is here in the meeting? I will continue. The program for the evening is as follows. We have 2 sessions of 1 hour each, and topics for today's evening are financial literacy for CAs and opportunities for CAs in financial system space. Our eminent speakers will talk about the 2 mentioned emerging areas of professional interest. Our first speaker of the evening is CA Rishi Khator from Kolkata. CA Rishi Khator is a chartered accountant by profession and is a fellow member of the Institute of Chartered Accountants of India. He is first class graduate from Calcutta University. He is certified public accountant from USA and also certified IFRS professional from WBUT. Since 28 years, he is engaged in practice of management consulting, developing corporate SOP, corporate restructuring, internal audit, corporate training, outsourcing, audit, taxation, capital market advisory, etc., and has national and international experience in many of such areas. He has written a book on personal finance and contributed to newsletters, house journals of various professional associations and corporate on matters of professional interest. With these words of mine, I invite CA Rishi Khator sir to this VCM. I would like to inform here that the participants have joined the VCM through separate online platforms. So the questions will be taken at the last 15 minutes before closing of the session. So I request all the attendees to kindly start submitting your queries. With these words of mine, I hand over the charge to the first speaker of the session, CA Rishi Khator sir. Sir, over to you. Sir, kindly unmute yourself.
Uh, Wishing you a very happy Saturday evening. Gratitude is the attitude. So I must thank CA Dr. Rajkumar Adukya ji, CA Gyanchandji ji Mishra, CA Santosh Rungta ji, and CA Kavita ji for having given me this opportunity to share my thoughts on such an important topic as financial literacy. Today is 25th June, and today is a very important day for all Indians. One is for a good reason, and another is for not so good reason. The good reason being that on this day in 1932, India officially started its first test match, which was in Lord's, London. And the bad reason is that on 25th of June in 1975, the then president of India declared emergency, which was a dark period in our democracy. But nevertheless, well, friends, Saturday evening is mostly reserved for our family, for our friends, for our parents. And believe me, this session on financial literacy is also for your family, friends, parents, as well as you. And you will be, entire session is replete with real life stories, and because examples are better than precepts, and one-liner insights, and because facts are stranger than fiction. And this financial literacy is being organized in a backdrop of a lot of economic uncertainty. So today we are witnessing, after the COVID shock, economic uncertainty. We are witnessing runaway inflation. Presently, retail inflation is around 6.95%, and wholesale inflation is more than 14%. We are witnessing a continuous fall in rupee as compared to dollar. We are witnessing a very choppy capital market. We are witnessing also MSME stress following the COVID. In all this backdrop, I think organizing such a session on financial literacy is very much relevant, and is of usefulness to all of us. And with these small words, I would like to congratulate the organizers for having thought of such a session on financial literacy in such choppy times, economic choppy times. With this, I would like to start my presentation with I'll be sharing my screen on the presentation. Financial literacy for chartered accountants. As I said, our entire session is replete with a lot of real life stories. So let us start with the story. I think I'll have to share the screen again because it was not getting operated. Here I'm sharing it again. I'm taking you to the presentation. So let us start with the first story, which is of Boris Baker. All of us know that in his highs, he was the world #1 tennis player, youngest to win Wimbledon at the age of 17. And he ranked among top 10 highest earners in tennis. And at one point of time, his net worth was 1,400 crores. In 2017, he went bankrupt. In 2019, he was forced to auction most of his trophies. He reportedly owed a lot of money to in debt as well as in taxes. And presently, he is serving 2.5 years of jail in UK. Another story, this is of Amitabh Bachchan. In 1999, he had a net worth of 60 crores, while his current net worth is around 2,800 crores. At 57 age, his company Amitabh Bachchan Corporation Limited ran up to losses of nearly 90 crores. He had no films, no money, had legal notice and also tax recovery notice on his house. Then we have the next Bhagwan Dada. He was a famous actor of movie Alvela 1951. Lots of very good songs in that movie. At one point of time, he owned 25-room house in Juhu, 7 cars of different colors, 1 car for each day of the week. After a series of flops, he went bankrupt. He ended up living in a chal in Mumbai. He passed away impoverished. Friends, these 3 stories, all of these people were very intelligent, very accomplished, very talented, but still they bring to us the lesson that they have taken financial missteps. They lived beyond their means. They incurred a lot of expenses, lavish lifestyle. They took a lot of risk. They did not have contingency funds, and they also accumulated a lot of debts and taxes. So what was it which was lacking in them? This is financial literacy. This slide is something like, which is better, you running after money and money running after you? Obviously, all of you will say money running after you. But as you, if you want to control money, if you want to make money work for you, you need to know the nature. Just like as we want to control our pets, we need to understand the nature of pets. Similarly, if we want to control money and we want to have money work for us, we need to know its nature. And what is its nature? Money thy nature. Money is a powerful force, and financial literacy is used to tame this force. It builds up economic self-defense. And if there is no defense, then money runs amok and it ruins your life. It is like a rat race. Financial literacy is an essential and critical life skill. Turning around the table makes money work for you. This is what financial literacy is. We will come to more details as we proceed. So what is if we say financial literacy is a awareness, knowledge, skill, attitude, and behavior of taking informed financial decisions. I repeat, it is a knowledge, it is awareness, knowledge, skill, attitude, behavior to take informed financial decisions. It promotes financial well-being. All of us must have heard that what we visualize, we materialize. Like how thoughts become destiny. Thoughts leads to words, words leads to action, action leads to habit, habit leads to character, and character to destiny. So from journey from thoughts to destiny, similarly, financial literacy is a journey from awareness to behavior of taking informed financial decisions. It promotes financial well-being. I am a 29-year-old chartered accountant. Sorry, I am a chartered accountant with 29 years of experience, and I understand a lot of it about chartered accountants, that we are good in numbers. We know where from the money is coming, where to the money is going. We have got a rigorous training in business financial practices. Every aspect of accounting knowledge we know in the context of the world of business. We are eager for success and status, and we also get to have peer pressure for lavish lifestyle, as well as for increased continuous consumption. Friends, this is what chartered accountants are, and all of you may be identifying with all or some of these six of the attributes of chartered accountants. And with this, I also share with you, as I said, one-liner inside, a quote from Upanishad, which says that avoid extreme yearning, but do not avoid desire itself. Learn to enjoy all that you have earned in moderation. Friends, we need to limit ourselves at times. Nature has taught us limits. Sun has got a limit. That's why we have day and then followed by night. Our eyesight has a limit. Our hunger has a limit. Similarly, we need to put limit to our financial expenses. We need to have a moderation in our lifestyle, which Lord Buddha also has said, Swami Vivekananda also has said, extreme of anything good or bad is equally undesirable. With these attributes, with the moderation, we will be able to achieve what we just understood about financial literacy. Facts are stranger than fiction. So all throughout the session, we will have do you know slides, which brings out facts and which drives home the particular topic of financial literacy. According to the economists, if all the money available is equally divided among the people of the world, within 5 years, people would come to the same economic situation which they are in present. It means poor will become again poor, rich will become again rich. So what is the problem? Money is not the problem. Problem is the ability to manage the money, ability to capability to control the money, ability to make money work for us. And this is what financial literacy teaches us, to make money work for us, to help us achieve our goals. Normally, what are the money concerns which each of us will be facing? Food, shelter, clothing, roti, kapda, makan, having one own house, having a vehicle, vacation every year, lead quality life with freedom of choice, provide for care of parents, provide for quality education of children, provide for the dreams of the family members. Even when I am not there, whether let the family members give the same standard of living. Even if I am incapacitated, let the dreams of family members not get shattered, and also to provide for my retirement. These are the normal money concerns which every individual, and so does a chartered accountant, face. And how do we tackle these money concerns? Let's see in the onward slides. The motto of our financial literacy is financially strong all lifelong. It teaches us to be strong financially, secured financially, and throughout life. Let us break this motto into two parts. What does financially strong mean, and what does all lifelong mean? Financially strong means that we have no financial constraints except the one which we put to ourselves. It is important that we put to ourselves constraints. We must cut a coat according to the size of the cloth. We have a freedom of choice. That's what financial strength indicates. And we can freely pursue the task that we want to pursue. For example, hobbies, spending time with family, friends, parents. If we have this freedom of choice, if we can freely pursue, then we can say that we are financially strong. And all lifelong, it means that we are financially strong consistently throughout the life. It is not just being lucky once. It is also it means that return from our investment basically finances our expenses. What does it mean? The one in number 3 actually represents financial freedom. We'll have more of it by way of a diagram to understand how can a return from investments finance our needs and wants, our expenses. You can have everything in life. Again, a one-liner inside. You can have everything in life that you want if you just give enough what other people want from you. It's a famous quote from Zig Ziglar. He was a famous American motivational speaker. So if you want money, give charity. If you want love, give love. If you want respect, give respect. If you want contacts, give contacts and other support to others who want from you. Friends, our life is based on a tripod of past, present, future. We learn from our past, we be in present, and we help create future. Past is the hindsight, present is the insight. We get insight by living in the present moment, and future is the foresight. So our journey is from hindsight to insight to foresight. That is what the life is: past, present, future. These are the financial literacy mantras, like where do we begin? What is the art of managing money, making money grow, leveraging personal finance, risk protection, and retirement planning and succession planning. Pretty much same as what a business finance would have, but personal finance has its own peculiarities, which is all the more personal to us. So when we say where it all begins, it comes with financial goals, financial plans. When we say art of managing money, it comes with having a budget of our own and emergency fund. When it comes to making money grow, saving and investing, when it comes to leveraging personal finance, it means managing credit. And when it comes to risk protection, protection from by way of insurance, by way of protection from identity theft, and finally retirement planning and succession. Friends, we all are chartered accountants, so we understand numbers. All these mantras will be explained in the ongoing slides by way of objective numbers. We have practical spreadsheets by way of a financial friend. We'll ask our financial friend during the session and get answers to our practical issues. So we'll start with financial goals. If one does not know to which port one is sailing, no wind is favorable. Seneca, he was a famous Roman philosopher. So financial goals basically provides direction in our life. It makes future less stressful, or it makes future more known to us. It gives us more anxiety-free time. Just as in business, we need to have goals. Just as in our profession, we need to have goals in terms of the growth, in terms of revenue, growth in terms of client, growth in terms of number of staffs. Similarly, in life also, we should have financial goals. I have given here a few of the life's milestones, one's own marriage, having children, children's education, higher education, having one's own vehicle, having one's own house, children's marriage, retirement planning, second home, parents' care, vacation, international vacations. All these are the life's milestones. And we can frame financial goals for each of these milestones. And in these milestones, remember, life is not a linear function. So there are a lot of twists and turns. So there can be loss of loved ones, there can be loss of job, there can be critical illness. All these coming together, we must address them as a smart, financially literate person. And this we do by framing financial goals which are smart. Now, smart, each letter of this word has a specific meaning. When we say smart, S means specific, M means measurable, A means attainable, R is realistic, and T is time bound. We must frame smart financial goals to attend to various life's milestones, some of which I have mentioned it here in this slide. Most people don't plan to fail. They simply fail to plan. So where we should all start? We should all start with having financial goals and making one own financial plan. Just as in business, we have a financial plan. Similarly, our personal financial plan should set out the goals that we have, the investments that we have, what loans do we have, how do we tend to address these loans, what are the long-term and mid-term strategies. So let us understand this from our financial friend as to what a personal financial plan will look like. So this is a personal financial plan of Mr. Gupta, and his current aptitude is good. His level of debt, in fact, he has no debt, so it is level of debt is excellent, obviously. But having no debt is also not good. Just the way we leverage business finance to grow, similarly, having a loan to leverage for wealth building in our personal capacity is also important. What are his financial goals? The way I have described: special education expense, children marriage, annual vacation, residential renovation, and so on and so forth. And he also needs to, he wants to save, because he has estimated what could be his monthly expense post retirement. So he accordingly, he needs to save 72,500. So as all of the personal financial plan are expressed objectively in terms of actual numbers through this financial plan. Then we have what is his risk aptitude? Risk aptitude in this case is an average, and what is his present investment allocation? He has allocated it to PF, PPF, mutual fund, shares, insurance. And as per his risk aptitude, this should be the allocation of his investments into various asset classes. This is what the financial plan says. And this particular says what reallocation is required according to his risk aptitude. And finally, how has he covered himself by way of insurance, whether this insurance is correct or not. This, friends, is a part of personal financial plan, which all of us should make, which will cater to all these needs, and which will lay down objectively the numbers in numbers, because we understand numbers. So in numbers, it lays down exactly which path we are going, which goal we need to achieve, and how we need to achieve. Again, we have a Do You Know series, and facts are stranger than fiction. Here, 60% of the billionaires use budget. But why do we need budget? 60, but just the way we have in business budgetary controls to achieve the target of planned expenses, planned growth, planned investment. All these are required to have a sustainable growth in the business. Similarly, in personal finance also, we need to have budget. And why do we need to have budget? Because it reflects the sources of money where we are getting. It reflects our spending pattern. It links to the financial plan that we have had. And also it gives out how much of the fund we require towards emergency and contingency. Again, let us ask our financial friend for a template of a personal financial budget. And this is an indicative template which financial friend has given. It shows where the income is coming from: active income, passive income is rental, interest, dividend. Then you have various expenses, which is home expenses. Expenses are segregated. You can have your own template for segregation of expenses: transportation, health, education, entertainment, charity, subscription, daily living, entertainment. You may not have so many segregations. You can segregate, you can customize this as per your convenience. What are the obligations that you have to pay by way of EMI and other credit card repayment, etc. And finally, what are the miscellaneous expenses? So you have a budget, you have created a budget, and you fill in the actuals as per your actual spending and earning figures. And then what you get whether there is a difference between your budget and the actual. But here the most important thing is that this particular slide is this particular cell, which shows your actual expense on the monthly level. And this brings us to a very important topic, which is emergency or contingency fund. Here, what is being done is 3 to 6 months, but after having experienced COVID, after having understood economic uncertainty, after having understood so many adverse factors around us, I would recommend that we should have an equivalent of 12 months of actual monthly expenses by way of contingency fund. When we say contingency emergency fund, means such a fund should be created and invested into an asset class which has very less volatility. Say, for example, fixed deposit, term deposit, liquid fund. These have very less volatility, and we can withdraw money as per the contingency and emergency within a short term without much variation in the value. That is the reason, and it is recommended to have 1 year of 1 year of monthly expenses by way of emergency fund. This is what the financial friend says. Again, a real life story. We all know about Mike Tyson. He was at the age of 20. He became the world boxing heavyweight champion. His career earnings were to the tune of around 5,000 crore. After his fall, he rose by way of TV shows, films, books, etc. His current net worth is 21 crore. And among his lows in 2003, he filed for bankruptcy with 193 crore debt, a lot of taxes due, divorce lawyers, and an ex-wife. Friends, what lesson do we learn? Mike Tyson also used to have tiger as his pet, and you very lavish lifestyle, also a lot of addictions. What lessons do we learn from this great man, once upon a great man, a great boxing champion? That we must live according to our means. And lavish lifestyle again is something which brings us financial doom at the end of it, and we must cut coat according to the cloth that we have. Tehti pair pasariye, tehti chadar hoye. This is one lesson that we learn. And no matter how rich a person is, he needs to manage his finances. No matter, he was a very rich person, very celebrated person, and still he left alone his financial management, which led to his tremendous downfall. Remember, it takes a long time to go up the mountain, but it takes a split second to fall from it. Again, do you know series? It's a very good quote. People who buy unnecessary things often end up selling necessary things. So we have seen Boris Becker get to sell his trophies. We have seen Bhagwan Dada who had to sell his bungalow, his cars, 7 cars, 7 of different colors. And we also had to see Mike Tyson, who had to bear a lot of financial hardships because of the financial missteps that he has. We all learn the idea of putting all these do you know series and real life stories is to drive home more effectively the point that what we should do, how can we make money work for ourselves, and how do we not let money run amok in our life. Then we are slowly moving to how do we grow, how do we make money grow. First, we start with savings. It requires no brain power, but only willpower. Remember, saving is a first expense from your earnings. It means if we tell the equation, earning is equal to saving minus expense, or I would say earning minus saving is equal to expense, rather than earning minus expense is equal to saving. I repeat, the idea should be earning minus saving is equal to expense, rather than earning minus expense is equal to saving. Saving requires willpower. Perhaps by the age of 60, as the survey shows, 25% people would have met their death, 70% retire, and critical illness plagues around 60% of. So how much do we save? What is the time value of money? advantage of starting early, let us ask our financial friend again, and which comes with a very objective numbers. So here we all thought of a savings goal for ourselves, and this time, by which time we should achieve it. So let us revisit our plan. Suppose the present age, suppose is say 35, and my saving goal, remember smart financial goals of our lifestyle. Suppose it is 15 lakh for higher education of my child. And then currently I have saved, say, 10,000 only. And monthly I plan to save again, say 9,000 or say 7,000. And the amount which I save, I put it on investment product which earns say 9%. And I have my this money, this saving goal that I have, financial goal that I have, will be matured on 7 by the end of 7 years. Means by 7 years I will need the money to finance the higher education of my child. But here, see what the financial friend is saying. But if I continue to save just 7,000 and put it on 9%, it will take 11 years to actually accumulate this 15 lakhs. So I have to save more. The calculator says, the friend says that I have to save around 13,500 to meet this goal of 15 lakhs. Friends, as we know numbers, we are number men. Frequently from our clients, we say that you are a number person, so you tell us. So similarly, we can use objective tools to plan our financial goals more intelligently and also realistically to achieve it. Remember, in many of the horror movies like Scream, like Scary Movie, like Godzilla, and so many other movies, monster keeps on coming. And friend, what is a monster in your financial plan? Any guess? Is nothing but the inflation. It eats your purpose. It corrodes your investment, and always there is a fight between the return on investment and the inflation. So let us get a reality check from our financial friend on this monster, which is inflation. Because you may know what is your present expense, but inflation increases that expense. So if I want to know what my the marriage, suppose the marriage of my child, I have figured, say I will put in say 50 lakhs, and this will happen after 15 years because the child is small. So after 15 years is going to get married, and okay, 15 years, and inflation rate is 7%. As I said, retail inflation is 7%. So actually, I have to have a saving goal of 1 crore 37 lakhs, around 1 crore 40 lakhs. This is what inflation is. It is driving home effectively that even though in the present level, my estimate is 50 lakhs, but if my saving goal, if my financial goal is happening after 15 years, considering the inflation, which is the monster in our financial plan, actually I have to save 1 crore 30, around 1 crore 40 lakhs. So friends, always when we are making our plan, we have to understand that inflation is going to balloon our expenses. Accordingly, working backwards, we have to start saving to achieve that financial goal. A very interesting story here is that of Akshay Khanna, a famous actor of Hangama movie, Dil Chahta Hai movie. In 2013, he was dumped of rupees 50 lakh by a con couple. And they promised that he would be doubling his investment in a year. Then in more recent times, Rimi Sen, she was also conned. She was assured an interest of 30%. by a businessman, and she was duped of around 4 crore. So what lessons to be learned from Akshay and Rimi Sen is that can we or should we chase high return? Frequently, financial institutions and Reserve Bank of India are saying that one should not chase unrealistic high returns, and accordingly to organize one finance, keeping in mind more realistic returns. So these gentlemen, friends, these two persons where there are umpteen number of examples. Why I'm giving examples of celebrities? Because we tend to identify ourselves, get connected to the story very easily when we know a known face and when we know how they were duped or what financial missteps they have taken, so that we do not take that, we learn from such mistakes. And obviously, we are chartered accountants and we are more financially literate, and we should be more careful while organizing our finances. Friends, this is a very interesting slide. This, as on 17 June, this speaks of the returns which was given by different asset classes. In last 1 year, I repeat, in last 1 year, term deposits have given the best return, because 5%. In last 3 years, gold as an asset class has given the best return, which is 15%. In last 5 years, again, gold has given the best return, which is 11.69%. And in last 10 years, the asset class, which is equity, which is tagged to Bombay Sensex, has given the best return, 11.7. So in each time period, different asset classes have given different returns. And we all know an age-old saying, do not put all your eggs in one basket. It means do not, when applied to financial literacy mantra, making your money grow from savings to investments, savings and investments. When we apply this age-old saying that do not put all your money, all your savings into an investment in, say, equity or gold or term deposits or liquid fund. There is a concept like glide path, which says that as I move nearer to my financial goal, I should change the product mix, change the mix of my investment portfolio from more risky to less risky. And accordingly, each asset classes have given different returns over a time period. So we should have a mix and match of different asset classes. This leads us to the next slide as to how should we approach our investment. So let's go and ask our financial friends. So first of all, we must understand what is an asset class. So again, this asset class, let's see what is an asset class. This particular slide gives us different asset classes. Some asset classes which are debts are of low return, low risk. There are medium return, low risk asset classes. For example, residential plots and commercial plot. But these are high ticket items. Not many people can do. And then REIT, which is a real estate investment turf, or a real estate mutual fund. These are medium return, low risk. Then we have medium return, medium risk, which we can, if we go down, which we have, which is in color green, mutual funds and ETF, and then unit linked plans, ULIP, and all these. Then we have the last one, which is high return, high risk, which is very unpredictable, the returns, but if they do give return, it is very handsome, very multiple of it. For example, paintings. I have myself purchased painting. I do not know what is its present worth, but people who have purchased, say, M.F. Hussain painting in his early days, now it is worth crores. So it is high risk, high return, but and so it is very uncertain. I would say direct equity is also high risk, high return, and in previous slide we have seen that over a period of 10 years, equity has performed the best. Then we have understood about the asset classes. But how much of our saving should we invest in a particular asset class? That should depend upon our risk attitude. Risk aptitude, when we say, it is depends on the values, our obligations, our number of dependents, our income, and so many other factors. So our financial friend has also come out with a risk aptitude barometer, which asks us a series of questions as to what is the age, what is your financial behavior, okay, and then what is the current income, how financially responsible. There are drop downs against each. So once a person chooses a drop down, the algorithm understands its financial behavior. There is a series of 20 questions, and finally it says that your risk appetite is average. It can be risky, it can be less than average, it can be very, very conservative. So according to the average investor, this particular our financial friend says that you have to allocate your portfolio into several ways, which is like, I'm just trying to get it. Yeah, here it is. On government securities, say 20%, ventures 15%, real estate, if one has that high ticket, mutual funds 30%, large cap stock 10%, gold, silver, commodities 15%, and finally. So actually, our allocation, first of all, must not allocate in one asset class, because different time period, different asset classes are performed differently. And which asset class should I invest in? It always depend on our risk aptitude. My risk aptitude is different from yours. So understand your risk aptitude first, and then decide in which asset class will you be investing. Allocate your funds to the asset class accordingly. Select specific product within each asset. Suppose you are frequently we find in by the analysts speaking that say auto industry is going to do well, or infrastructure is going to do well, or IT industry. But which product, which specific asset, or which specific share in each of these industry will be doing, that depends on you. So you have to select a specific share. If it is a capital market, you have to select a specific mutual fund if it's a mutual fund, and accordingly, number 5, make the investment. Always review your portfolio. You must review it at least every 6 months, because the classes, asset classes which you have may have witnessed some imparity, and may have witnessed some sudden change. I remember if a fraud is committed in a company, the share drops tremendously. If the interest is rising, the bond, the existing bond rates decline. Similarly, if RBI is increasing its repo rate, then obviously the fixed deposit rate also rises. So let us ask our financial friend and work with actual numbers on this investment portfolio. So let us again type in few numbers. You must anxious to find out how much your investment will grow. Suppose I have invested I have invested 5 lakh in a particular this, and its rate of return, say PPF, is 7.9% or 7.4% now. And number of years, normally it is say PPF cannot be 50 lakh. So the maximum is 1.5 lakh I can put in PPF. Okay. And over 15 years is the normal maturity. And number of frequency, I make an investment once in a year, and amount invested per above period is amount already in, okay, 1,50,000. So here I can put my present investment as 0, and So at an expected return rate of existing on this is 7.4%. And then how much do I get? So if I am able to, for 50 years, if I am able to invest every year, it is 1,50,000 only. Then by the end of 15 years, my PPF kitty will give a value of 38 lakhs. Obviously, there is no tax here, so there will be, it is tax not adjusted, 38 lakhs. So this particular financial plan gives objectively how much my investment, if I continue investing every year in a particular investment class. Again, we have all of us know the gentleman, king of good times, owner of Kingfisher Airlines, chairman of the United Breweries Group. He had a net worth of nearly 11,500 crores in 2007. In 2016, he left India that 17 on a day when 17 public sector banks moved the debt recovery tribunal for 9,000 crores, which was due. He is now a fugitive. He faces charges of fraud and money laundering. Friends, what do we learn from this? We learn that we must not allow our loan obligations to balloon. We must take loan as per our capability to repay. And another important thing, it is considered if my my loan obligations is limited to 35% of my gross income, it is okay. Up to that amount, I can take loan. And also, we understand from this case that we must not be very emotional to our investment. This gentleman was very emotional towards Kingfisher, even though it was making losses year on year, but still he kept on pumping money there. So if any of our investment asset class is persistently not performing, we should not be emotional or sentimental, and we should part with it taking a judicious decision on that. Credits, it has 4 C's, which is capacity, capital, collateral, security, guarantee, and last but not the least, credit history. Now, credit history in India is by CIBIL, Credit Information Bureau is there, CIBIL. There are others also, Experian and others. There are 4 credit information bureaus in India. And a CIBIL score of 800 and above is considered very good. So if we are able to keep our CIBIL score correct and high, there are several benefits that we follow. Not only do we get loan credit very easily, seamlessly, but we are also able to negotiate vigorously the interest rate, the processing charges, as well as the keeping a high CIBIL score by taking loans within limits, by following a certain principle of EMI up to maximum up to 35% of my gross income it would be good. And taking loan is also good, I would say, because this is just like leveraging. Business take loans to grow exponentially, to grow more, because equity is costlier than loan. Similarly, for wealth building, for wealth creation, taking loan up to a certain limit is important. And what is that limit depends from person to person. Credit is good when it is at the time of crisis, when it is at the time of large items like home, car, etc. But it is not good when one is spending beyond one's means and one is forced to live on credit, or when the amount of repayment that we give on credit towards the repayment of loan should have been spent on something else. Maurice Wizard, again an American author, he says the surest way to establish your credit is to work yourself into the position of not needing it. This name has been changed. A real life example, Sachin, the only bread earner. It takes life policy of 2 crores, mediclaim of 5 lakhs. 1 year down the lane, the doctors detect a cancer. Treatment costs 50,000 per month, and he cannot work. Friends, what lesson do we take? First of all, we must have plan for risk protection against critical illness. The quantum of mediclaim should be appropriate. And also, we should take a critical illness cover, which can be on a standalone basis or it can be merged with mediclaim. Otherwise, as I see, the twists and turns of life are many. We are not prepared. Risk protection is something where we are transferring the risk of in life, in personal life, to an insurance company by taking appropriate cover. There is another real life situation wherein Arun, he requires 5 lakh for his son's primary education, 20 lakh for his daughter's higher education. His monthly expenditure is 50,000. He buys a house with 15 lakh loan. He takes a cover of 10 lakh. A year later, he meets with an accident. Roma, his wife, finds herself with 2 children, mortgaged house, 10 lakh from insurance company, and family dreams shattered. What do we understand from here? We understand that when we are planning our life insurance, when we are planning to cover protect our to have a risk protection on life, it should be of a proper amount. Under insurance is no insurance, but what is a proper amount? Can we have a more objective approach into determining what is our life insurance requirement? Before that, we can ask this from our financial friend, but before that, a very good saying: only when we are no longer afraid do we begin to live. We begin to live when we are no longer afraid. We live like fish in water, like bird in air, and we live freely. I'm reminded of a William Wordsworth extract of a poem. What is this life if full of care? We'll have no time to stand and stare. No time to stand beneath the boughs. Boughs are branches of a tree. No time to stand beneath the boughs and stare as long as sheep and cows. Friends, how much insurance do you need? It depends on a certain objective analysis. There is a logic, there is a science behind it. Our financial friend will tell you. Insurance, mind you, insurance is not an investment, and we must review it periodically. So let us quickly ask our financial friend, how much insurance do we need? Suppose my gross income 36 lakhs, fine. Housing loan is 75 lakhs. Car loan is 10 lakhs. I have no personal loan and annual living expenses 24 lakhs. I have a number of dependent, which is 2, and number of years of support required. By the end of 10 years, they will be earning on their own. So I need to support them for 10 years. And expected return or rate of return on the investment is around 8%, whatever investment I am making out of my savings, and expected inflation rate is 7. Friends, as per the thumb rule of insurance versus income, which is 6 to 8%, 2 crore 88 lakh insurance is required. But we are chartered accountants, we are financially literate, we know the numbers well. So we will not go with thumb, we'll go with more better logic. So our recommendation is to have around 2 crore 66 lakhs of life insurance. But if you take 2 crore 66 lakh, also depends on what policy are you choosing. There are policies with higher premium. There are policies which is called term insurance with fixed premium. So your insurance, your premium budget, life insurance premium budget, given that 2 crore, 2.66 crores of coverage should not be more than 2 lakh 80. Friends, this objectively determines what should be my life insurance. Frequently, life insurance policies are sold under some pressure from a friend's friend, or relative or relative's friend. But you should know, better how much do you require and how much premium cost will you be bearing for that. Real life story: Rajkumar Rao, a very famous actor, his PAN card was misused in adverse outcome, leading to adverse outcome in civil. Sunita Gaurikar, wife of Ashutosh Gaurikar of Lagan fame, he was a director of Lagan, was duped in an online fraud of ₹1 lakh relating to her Paytm account, which was somehow compromised. Friends, not only should you protect your life, not only should you have a cover, risk protection for life, for medical, for general insurance, you should also protect yourself from identity theft. Friends, there is a race between fraudsters and the police and the financial institutions. They keep on saying financial institutions, RBI, police keep on saying do not share your OTP, do not share the confidential data. And fraudsters keep on finding new ways to actually get hold on to your, to get hold of your confidential data from which they can commit fraud. There are new ways which all of us must understand, and these new ways could be like what we call as money mule, where a victim is duped into laundering via his bank account. He may be given commission, he may not be, but he simply asked, please help me, please put in this deposit of money here and I will withdraw it from the other city. So this is money laundering. This is a way of committing fraud by fraudsters. Phishing is another, where when unsolicited email, SMS are sent, and say you have received a huge lottery prize, say you have received a fund, and the fraudster asks you to click a link, and which on clicking your confidential data which is stored in that device, whether it is phone or which is your laptop or your desktop, it gets stolen there, and which is then used for committing fraud. Phishing is something where through phone calls they are saying that suppose your credit card is blocked, you please share your OTP fast, otherwise you will not be able to use credit card. This is called phishing, approaching by phone and duping the unsuspecting. Juice jacking is another, where by using public charging port while you are traveling, say in airports, say in trains, say in restaurant, the malware is transferred to that charging device, which is getting charged to steal confidential data from there. So beware of these ways of committing fraud by fraudsters. Do you know that what is the national number for reporting cybercrime? It is 1930. Government of India has introduced this number. Please share it with your family, with friends, with parents, and please ask them not to share confidential data over phone. Friends, we are moving towards the end, and this gentleman is A.K. Hengel. For 40 years almost, he worked in many good movies like Sholay and Bawarchi. After 2007, he found it difficult to get any more roles because of his old age. By 2011, he could not pay even his medical bills. So film fraternity came forward to foot those bills. In 2012, at the age of 98, in extreme poverty, he died. Friends, what do we understand from this? We understand that as with the advancement of medical science, advancement of awareness of health among all of us, the average expectancy of life is increasing. So we must do proper retirement planning. With increase in life expectancy, this retirement planning has become very, very essential and critical. And again, there's a science and logic behind retirement planning. Just because just a random number is not good for this. So let us understand for financial friends, what is, suppose the retirement age is 60 and interest rate which we can earn from our average interest rate from various investments is 9, inflation is 7, and expected monthly expense at the time of retirement, say it is put as say 1 lakh. So how much retirement kitty do I need? 1,37 lakhs is the retirement kitty I need. And suppose my present age is 50 and the present corpus which I have already earmarked for retirement is 1 lakh, and the rate of interest which my invested corporate corpus is earning is 8%. So actually I need 8.96 lakh of investment every year from 50 year to 60 year to actually meet my retirement planning of corpus of 1,37 lakhs. Here we have assumed life expectancy of 85 years. So this is something we need to work our numbers. We have to keep in account 2-3 things. One is your return on investment, inflation rate, and also how many years to retire. And these 3 things will all together determine our retirement planning corpus required. Ronit is a senior manager with a private bank. His insurance cover is 1 crore. And he states that in case of his death, his wife will receive 1 crore, primary beneficiary she is. He meets with a sudden death. His wife receives the amount after a year she remarries. Ronit's parents are penniless. Friends, what do we understand from this? Succession planning. Proper succession planning is important so that the way we intend our wealth to be distributed among our different members of family will be done the way we want it. And it also, if there is a proper succession planning, it provides seamless transmission and it ensures financial security of near and dear ones. There are ways to do succession planning, will, trust, and our choice depends on whether a spouse can handle financial decisions, whether children can also handle a large amount of inheritance, whether they will get burdened into financial decision making and administration. If all these are coming true, then will is not perhaps the right thing to do. One should go for trust. Succession planning is important because we would like our family to have the same standard of living, to have the same dreams which they had harbored before. And when we are no more, when I am no more, they will continue to do that and achieve those goals and dreams. This is a beautiful slide which speaks of financial freedom. So understand this, like my entire income is going towards saving and then finally investment, which is asset creation. Investment in various classes and the income from this asset, say by way of interest, by way of rent, by way of dividend, is actually meeting my expenses. So no part of my income is going towards expense. It is entirely going towards savings and interest. Suppose I have an passive income of 1 lakh and my expense is only of 75,000. So the balance 25,000 goes back towards asset creation. This is, if we are able to achieve this diagram, we are actually financially free. And when we are financially free, we are actually able to manage, we are able to take control of our child, and we actually have money working for us rather than we working for money. Friends, I have come towards the end of my presentation, and with parting thoughts, I would like to share few thoughts towards as a parting thoughts, that why should we have the hassle of understanding the principles of earning, spending, saving, investing, borrowing, etc. Because, friends, because you love yourself, you love your family, you love your parents, and it is for them and for you, you have to do this. Keep an open mind. You will, all of you are already very good in numbers, but still always keep an open mind. You will have a window into the thought process and you will gain tremendous depth and insight. If you want to have something, give something out. Remember that Zig Ziglar, what he said. You will get back from the universe many more of what you are giving. If you want money, give charity. Know yourself and understand your risk aptitude. Do not go on hearsay, do not go on tips. Understand your risk aptitude and then plan your investment in different asset classes. Remember, different time periods, different asset classes perform differently. Build up a solid base of contingency fund. As I said, 1 year of monthly living expenses should be put aside in a very safe asset class, which doesn't vary much with changing times. Early in your life, buy a home and repay much before retirement. Most of you must have already got it. If not, because a survey of retired people say 60% of them said one of the best decisions they have taken, financial decision they have taken in their life, is by purchasing house. It's very important to have your own shelter. Make list of things to do every day. Remember that Pareto principle. We must direct our energy, focus on main energy on more important things. And this financial literacy empowers you. It is no get rich quick formula. It is my humble efforts to empower you and with the motto of making all of you financially strong and happy all along. Financially strong all lifelong and happy all along. Thank you so much, and I hope you will appreciate, you will find it purposeful and gainful in your personal finance pursuits. Thank you. Over to the moderator.
Thank you, sir. It was such a wonderful deliberation. I would like to thank you for sparing your valuable time on such a valuable deliberation, which will surely enlighten us and help us in the future course. I would also like to thank the CPE committee for taking up such an important topic for all of us, as it will surely help us. Our second topic for the session is opportunity for CA in financial system space. Our speaker for this session is CA Vivek Gupta from London. CA Vivek Gupta is a chartered accountant and a certified information systems auditor, ISA CA. He has over 20 years of experience in large-scale finance transformation with expertise in Oracle e-business suite, Fusion Cloud, and finance operations. He is a certified Oracle Cloud Fusion Financials implementation specialist. He has worked for more than 35 clients across Europe, Africa, Middle East, and South Asia in various capacities to rechannelize their ERP investments and help realize objectives and KPIs for the program. Over 12 years of experience with KPMG and EY, leading finance IT advisory practices in Oracle ERP team and assisting several clients in ERP solution design, program delivery, accounting, GAAP advisory, and system-led controls design. With these words of mine, I welcome CA Vivek Gupta sir to this VCM. Here, I would like to inform our speaker, sir, of this session that our attendees will join from various separate online platforms. So queries would be taken in last 15 minutes of the session. So I would also request the attendees to start posting your queries also. With these words of mine, I hand over the charge to the speaker, sir. Sir, please.
Thanks, Kavita ji. Thank you so much for the kind introduction. I would like to thank CPE Committee President CA Dr. Rajkumar Adukia ji, Vice President CA Gyan Chandra Mishra ji. Also, I was hearing the session from CA Rishi Khator ji. Very important to understand this fiscal discipline and the on the personal front more than anything else. A personal lesson to me that we all understand this very well, but at times we lack the consistency to follow this all through. Generally, after a certain stage, we tend to believe that, oh, we have enough money and everything is taken care of. But some of those case studies were really eye-opener and we need to really stick to that. Well, that was good for Friday evening to think over the event. Here, I would also want to take this opportunity in my little way to help you see if you can have more opportunities of maximizing your gains first, and then definitely you can channelize them to proper savings and future planning, as Rishi Katorji already gave us a good lesson to follow in life. With that, let me share my screen and I will try to get through my presentation. Just give me a minute. So here we are, friends. So my topic is simple. We always keep thinking what else can we do. Can we have something more as our chartered accountancy firm practice? What are the new opportunities? Everyone want to keep thinking what else can we do. Those who are in industry or those who are in profession, both ways. So simple topic, simple things there. Financial system space, what it is it always IT? I keep thinking, I speak to several of the CA friends and I keep seeing that they always think that this is more for technology guys to do. So we'll try to deliberate a bit on that. What is the role of a chartered accountant in there? What values can we bring? Is it a space really for a CA? Then I have divided it into two parts: opportunity as an individual. How could I gain relevant skills? If it really interests you, how can you get those skills? What is the opportunity and how to get started? Many times we feel, yeah, this looks nice, but can I really diversify into this? So that becomes an important aspect. And last but not the least, very important, I have spoken to so many partners in several small size, mid-sized firms who always want to try out new opportunities at their firm level. And they find it difficult to again channelize or diversify. So one of these areas could be financial system space. And I want to probably give you some bit of it in terms of thought, whether you or your firm can really diversify into it. With that, let us get into the details of this. Let me try. I'm unable to navigate this. Same problem as Rishiji you are facing. Let me quickly reshare, please. No.
Sir, it is now in presentation mode only.
Yeah, it is, but I am not able to navigate to the next slide. Just give me a minute. Yeah. Sorry for that interruption. So in this financial system space, though there is lots to speak, but I have chosen some 4 or 5 core areas where I would give you some more insight to. So first is ERP. I think that is the easiest to understand. Most of us already understand that. I am sure people would have heard about SAP systems or other systems. So we'll talk about that, enterprise resource planning. Second is EPM, which is enterprise performance management, which is more around corporate reporting consolidation. We'll speak about that. Risk and compliance, we all understand what systems, again, a very good space to operate in. Core operations, financial services industry, we come from finance background, all of us. So financial services is always more like to understand those finance operations. So in space of banking, insurance, broking, what are the core systems and how we can probably get into the advisory space there. And lastly, automation, which is around new technology, finance, fintech, as is the buzzword these days. So we'll speak a bit about that. Getting on there, I'll move on to the next slide. So ERP products, friends, you would have heard about your clients, or you would have definitely got an opportunity to work on some of these as your client or as you directly working on it. So SAP, the largest ERP product, as we all know from Germany, SAP systems, or SAP as we call it. Likewise, we have several other ERP systems: Oracle, Microsoft, Infor, Workday, Sage, IFS, Epicor. So what are these systems there for? You can relate these to a slightly broadened or a much wider version of what we have in Tele. I hope everyone in India understand Tele very well. So these are multinational systems which have broadened scope than Tele, which limit itself to, say, core financial bookkeeping, subledgers, or some key areas in purchasing and others. Nowadays, even Tele, by the way, calls itself as Tele ERP. Yeah. So these are backbone systems for financial accounting integrated with all other systems. So if you have multiple systems, ultimately these systems become the final accounting systems from where the trial balance, financial reports, and other financial statements for the clients can be prepared with. One of the key feature which these systems bring in is the multi-dimensional accounting and reporting. So not only helps create the financial report required for statutory purposes, it also helps segmental reporting. It also helps your internal MIS, be it by products, verticals in the business, locations, branches. So you can set up accounting at multiple dimensions, and we can get all kind of accounting reports then, because the accounting is at those many dimensions and not limited to financial account alone. Have automation for functions beyond core finance. That is one of the other important functions. So it is not related to finance alone. You can expand the scope of these systems into operations beyond finance. So be it HR, payroll, manufacturing, supply chain, they have capabilities to automate or to have electronic records in those functions as well. These are having workflow and audit capabilities, and also bring in inherent checks and controls, which are very important once your business grows beyond a certain stage. When you have multiple locations, when you have businesses or branches completely being run by subordinated staff. So just to give a quick glimpse on what a sophisticated ERP module would look like. So if we see this here, you can see that the modules, the finance is just one bit of it, but we have procurement, manufacturing, inventory, warehouse, supply chain, project, service resource management, workforce management, HR, e-commerce. So all of these become part of the ERP modules. This is one example from one of the systems which I have shown on the previous slides, but almost all large ERP systems have several such modules which can be implemented for the client space. Yeah. Next is EPM products. EPM here stands for Enterprise Performance Management. The core systems here are again Oracle, SAP, Workday, OneStream. Now, how are these different from ERP systems? So these help in large-scale planning, budgeting, and reporting, be it consolidation or any other kind of reporting. If you have multiple ERP systems, many large organizations have some subsidiaries or some companies working on one system, other companies working on some other system. So these EPM products then help consolidate the financial information from multiple systems into single systems and help report on those. So these are integrated with ERP systems, have niche reporting capability, and can churn large volumes of data very easily. So before I get on to other products, I just gave a brief on these two. And conventionally, people say, oh, this is all understood as IT. What have we to do there? But I think that is a misnomer. CAs there are a crucial bridge between finance function and technology enablement. These technology implementation requires good understanding of finance, accounting, tax kind of aspects for the organization. And CAs can definitely bring in value there. That is what I have been doing for past 20 years. So our role as a knowledge advisor, evaluator, business analyst, subject matter expert, we call it as functional expert or finance transformation expert, is very important in in this space. We don't do any software development, no coding, but we end up doing mapping, design, documentation, testing, training, resolution of issues for the client. And more importantly, we would have chartered accountant as CFO or the financial controller at most of these organizations. And their comfort is much higher if they are speaking to a chartered accountant who understands all these reporting rather than being speaking to a developer who doesn't understand that well, and the outcome is then not realized. Yeah. So one such other area is integrated risk management. Risk management today is very important for any business, growing business or grown business. And if we see the risk, you can divide the risk into operational risk, strategic risk, or tech risk, which has technology risk, which has become now one of the important complete area for any organization. And there are several sub areas within that. We to control that, we have internal audit, EHS, environment, health and safety, as we call it, ethics and compliance, privacy risk, legal risk, business continuity, quality risk, ESG, which is another new area taking prominence these days, vendor or third party or digital risk. And all of these then need assurance, compliance, resilience or performance for organizations to contain this. And how is that achieved? So if you see, this entire risk management is achieved through policies and procedures, which is, if I say, one part of it. And then to implement those policies and procedures, there are products and services, again, which become a very important area where we can step in and we can help the clients to get onto this space as they grow their business. Now, core operations in financial services, not to speak much about it, but we all understand banking, treasury, policy administration systems for insurance, fund management solutions, financial risk management for large organizations, be it banking or others, broking solutions, credit management. All of these today require sophisticated systems, and these systems are not plug and play. You can't simply enable these systems like, okay, I got a new laptop, Microsoft Office is on there and I can start using it. No, these systems require implementation. These systems have long gestation time for any organization to adopt this, to have them mapped fully for their business operations requirements and to realize their objectives. So it becomes very important in that space that someone knowledgeable is helping them implement, design, or deliver these systems for these organizations. This is just an example slide. If we see core operations for banking alone, EdgeWork systems, which we all understand as Finacle, that is Infosys product, which is implemented in many banks in India and now overseas as well. Likewise, there are several products which are available in the core banking space. And these core banking projects, when implemented, run year after year, and there is million of values in there. Now one can easily say that is left only to the large organizations. How can we play in this space? What is in it for me? So I'll come to that bit, but this is just to give a sphere on what are the various products, what is being used in that space. In automation or new technology, friends, you would be hearing these words. RPA is robotics process automation. Nowadays it is used extensively in organizations to automate even the internal audit functions. So no more vouching or no more verification. Processes are being designed on RPA products, and which help automate a lot of internal controls, internal audit, even stat audit. A lot of aspects can be automated using RPA technology or RPA tool. Again, that requires implementation based on business processes at respective organizations, at respective clients. It's not plug and play. E-commerce, we all understand after COVID, it has taken significant prominence. Everyone wants to now see how they can sell their product and services through e-commerce channels. Wherever their products or services can be marketed through e-commerce, they want to go on to a shared portal or a niche own portal, but that has become a need of the current time. Then we talk about forensics, very important. Fraud investigation, or having forensic products or these kind of practice is also very niche. CA Institute also runs a course now on forensics or fraud management. So that becomes an important area. Blockchain, we keep hearing how we can leverage. That is again a new technology. Treasury, age old, but the newer products which keep coming in treasury always have enhancement for treasury. AML, anti-money laundering, again a very important aspect of risk management or financial fraud. It has niche products in the market which require niche implementation services. Again, a very important one there. NLP and AI, relatively new, natural language processing or artificial intelligence. Nowadays, if you try to get onto any chat service, you're not, chatting with an individual, but with a bot on the other side. Now, these bots are different for different industries, are again configured as per specific client requirements, bringing a lot of opportunities there. Credit scoring, again is in respect to credit rating agencies. Rishiji also spoke about Experian or CIBIL. We have Equifax, we have others which are operating in this space. So again, there could be important system play there. So just to give you a glimpse of, let us speak a bit more about RPA that has fairly matured now. So this is a Gartner quadrant for robotic process automation products. So you can see UiPath there. I think anyone who is more associated with technology would know that UiPath leads the RPA space. Blue Prism, Automation Anywhere. These three products are well known in the market, and several firms, several small, large organizations are helping several of the clients implement products or solutions on these products, which can help achieve internal controls or internal audit framework within the organizations, automate some of their processes for which they are employing a good number of staff. So see how that can help them in their processes. Now, in that implementation lies the advisory, aspect, and we can step in there. We can help, get clients realize their objectives more. So that's how I look at this space. I have not put products or services for all the all the 4 or 5 different streams I have called out for financial system space, but that gives a bit of an overview there in terms of what we can do there. Now, having understood this, maybe it would be all crossing across your minds as to, okay, you are saying about all this, how can we really get into this space? What is that you expect chartered accountants to be doing here? So this was just to give you a flavor that this is a very large spectrum, a very large space to operate in. Mostly dominated by IT companies, but believe me, there are a lot of chartered accountants working in this space, in these IT companies or advisory companies, which are helping clients realize objectives for these tools or products, if I may say so. So let me get on to how this is an opportunity for an individual. Firstly, to give you a number here, CA in this space are already in thousands. I definitely can vouch for that number. There are, if not in 10,000, I can definitely say in thousands. So people all these IT companies, small time firms, or even small niche firms set up by chartered accountants themselves are operating in this space, which is helping client implement some of these technology or products which I have just briefed upon. So a large number of chartered accountants are already operating in this space. New projects or new clients will always be there. If you are working as client service advisor, you keep moving from one client to other, and that is how you keep getting new projects. That has been my experience working in several geographies across several clients. The work involves global acceptance and outreach. Some of these products are not limited to India alone. To give you an example, if we are chartered accountant in India, we generally have that knowledge inhibition, if I may say so, because you can't operate in other country directly as an auditor because you don't have relevant audit you can say mandate there. Now CA Institute is doing bilateral treaties with many countries. Still, that would give us recognition there, but whether we can fully undertake audits or full advisory kind of work which we do as tax experts or audit experts in India, we can't do that in overseas territories. But some of these products which I have told here, be it ERP systems or these RPA technology or these banking softwares, they are known all over the world. And if you work in India or if you work overseas, you have opportunities everywhere. So it opens global doors for us as chartered accountant fraternity. You are not limited to Indian clients alone. So we definitely have global acceptance and outreach there. Now, most of the CAs are inducted by organizations as fresh chartered accountants. That has been the experience. That is what I see, and they then rise up in this space, right up to partner level in Big Four. They become head of financial systems in many organizations, or they are even finance transformation practice lead in large consulting service organizations. Remember, I am talking here only as opportunity for an individual. I'll come to the firms later, but this I am talking specifically for individuals. So individuals can look at they being in this space, and gradually as the experience rise, they can take over a very heightened role in any organization, as I say, right up to partners in advisory space in Big Four firms, which are well known to all of us. Pay scales have become very dynamic these days, owing to big resignation syndrome. Many of you would be, thinking, okay, you're talking about this. What is the pay scale here? I don't want to give any numbers out here. I am sitting in UK, so numbers might not be very well related. But I'm sure most of us know about Glassdoor or any other such, portals where you can compare the pay and find out what it takes, what it means for these kind of roles. And if you have any specific questions, probably I can take up or later have that on the personal window. There is ever increasing demand in this space owing to new technology and change or upgrades. So if you feel that, oh, we have done this once for a client, would we ever have an opportunity again? It is a never ending story. Technology these days is changing so fast, it's so dynamic, new things keep coming, and it is never ending. You just need to keep investing in yourself, learn new things and deliver new things. So say robotic process automation for internal audit. Who had thought 10 years before that internal audit can be automated to a large extent using RPA tools? But that is what we are seeing today. So that is a change. Now RPA itself brings in a lot of work for chartered accountant fraternity. If you understand, if you can tread in that, I'm sure you can do a lot of work out there. Conventional ERPs are being replaced now with cloud technology. So you implemented the ERP once, client would again come back after a few years because technology is outdated. You need to upgrade to a new version. So again, there is opportunity, self-created opportunity once you are into this space. And you also keep upgrading yourself naturally. So it is not that you have to undergo a formal training or education every time. You are just in that space. Do we you attend all tax laws, even the new complete new act coming there? Do you really undergo a formal training again or a formal examination again? No, because of your experience, you being on the subject, you can quickly pick that up. Maybe you attend a few CP sessions here or there, or few discussions or seminars, and that's about it. Something similar happens here as well. So what is the challenge? I am just talking about the opportunity. So challenge here is you should be ready to be outside your core finance domain. It's very easy to operate in audit, internal controls, tax advisory space. That is what the normal mindset goes for a chartered accountant. But if you look outside that, you can definitely operate in this space, and you should be able to distinguish and spearhead amidst ocean of other professionals. So yes, engineers, MBAs dominate this space, and we as chartered accountants can call out our niche in this space. You operate in this space and you can rise up to any levels. That is what I have seen. So that is of course a big opportunity. So that's more about an individual. Let me switch to the firm. That is more interesting as a topic. I see many partners of medium to small, professional firms who always keep venturing about, new avenues, how they can increase their practice, grow their firm, increase the size. So this could be potentially of importance in that space, and probably I can talk a bit about that. So for firms, or for before I get on to these firms, let us just talk about the knowledge, skills and resources overall. So you are a chartered accountant, you have a technology hat, and I think that is what is required to get into this. Companies train the candidates on the job. In diversification cases, you can invest in your own training. Free material is available on YouTube. Trainings are conducted by product vendors, SAP, Oracle. There are certification examinations, again not mandatory to get into this space, but if you want that you get over recognition, or you want to call yourself with a certified word, you can go for those examination. And last but not the least, all official documentation is available on the internet. You can freely download that and use it for education purposes only. Once you get into the commercial space, of course you would be working on contract or as an employee, or in some commercial capacity. So those are governed with that there. Moving on, let me talk about opportunities for the firms. This could be of interest. Large established practices are there with big four IT services companies and boutique IT business firms. Project size in India can range from INR 15 lakhs for a small to medium organization, and for overseas client it could be anywhere between USD 50,000. No upward size, of course. These projects can run even into millions. So I am talking something here which can grow really huge. Project entails system design, configuration, testing, training, design of reports, system support, enhancement. So a lot of work is involved. Projects are not short-lived. They can range from 3 months to perpetual. So you can be working in this space ever and ever for a client. I already told that once you are associated, new things keep coming and you can keep doing new things in the same space. And it could be nice to have annuity revenue from clients alongside other advisory services which you provide. Licenses. So many of these products have their own license matrix. Licenses can be sold through a separate unit if so required. So you can procure the licenses on behalf of the client. You can procure the licenses yourself to serve the clients as client servicing licenses. So there are various modes. Again, you can get through that. Appropriate measures to be in place. That is very important. You need to have appropriate measures, in particularly in case of audit clients. to safeguard your independence and conflict of interest. So that is one thing I would leave the firms to safeguard with. It is very important to operate with proper independence and conflict of interest there. Yeah. And having spoken about this, firms might also be thinking, okay, it is not that easy to venture into this space. Yes, I understand that concern. And how do you go about it? So these are only a few tips. It might work, it might not work, but this is how you can tread on any new service. In my view, you require clients, of course. Yes, that is the foremost thing. Who is ready to take that service from me? Are my clients ready to take that service from me? So I need clients, but most of us would have clients, so existing clients, so that is a good thing. Now, three other things which you need to get your firm enabled in this space is you need business partners. I will speak about that. People resources, very important. If you're operating as an organization, you need people there, and non-people resources. So these are the three things I see which would be important. So clients, you can identify a product or a service you want to venture on based on clientele, see their interest, speak to your clients, what you can do for them, what do they feel important, and you can then start that product or service. You can hire one or two good people or get them trained. That is how you start low, but you can get someone with ownership around that. You can do some demonstrations to your client. Those are important. You can see their interest. Now, once you see their interest, you can have partnership with product vendors. Most of these product vendors are more keen to have business. If you say you want to be their partner to implement for clients, they are more than happy to offer partnership to you. They become your business partners. And you can also have partnership with overseas service providers. India being an offshore hub, we can act as we can act as offshore service providers for overseas organizations. Many firms are already doing that, I know that. Maybe not in this same space, but not a lot of other space. We know about tax outsourcing, KPO outsourcing being done by CA firms. So why not in this space? I think we can easily venture into that. You can have partnership with overseas service providers. And skill and enhancement training, you will have to plan for that. That comes naturally. And you have to manage the churn. This is a very volatile space with current times. So you need to ensure that you manage quality people out there, keep them trained. You people might leave and go. You might do induct new people. If you are on for that challenge, I am sure you can trade in this space. So that is what I thought, friends. I will leave you with. I know it is Friday evening, and I think it would be good in time for us to stop here. Happy to take any questions, or back to you, Kavita ji, and we can then deliberate more on this. Thank you.
Thank you, Vivek. Nice to see the presentation, and I saw Rishi's presentation also. Both are marvelous presentations, and Vivek, especially thanks to you addressing, co-adjusting, the London time and India time. That is what world is flat.
Yes.
And I would request participants, 1400 participants are there, that please come forward, write on a subject. Institute gives 500 rupees per page. Become a speaker, become a moderator like Kapita is moderating, become a global practitioner in non-traditional areas. Committee will mentor, I will personally mentor. You can write to us. So, Kavita, over to you. Are there any questions? I request Parth to assist us. Please put the questions in the chat box, Parth.
Sir, till now there are no questions.
Great, Kavita, great. I think both faculties were so excellent that participants have understood the subject.
Yes, sir. The deliberation was very lucid.
Yeah. I saw them, both of them. I saw the presentation.
Adukya ji, either they have understood fully or they have not understood at all.
But we will be positive. So they have understood 100% Rishi, because that is the way we move on in life.
Yes, very much, very much.
Yes, sir.
Okay, Kavita, we can close the webinar.
Okay, sir. Should I give, let me give the formal vote of thanks to both our faculties. And I would like to take this opportunity, as I have got this global platform, as suggested by CA Rishi Khator sir, if we can apply the formula earnings minus savings is equal to expenses, we can have smart financial goals. And as Vivek Gupta sir has said, though this financial space is little bit difficult, but then I must say we can tap this global opportunity, as our sir has said. And I take this, I really give my heartfelt thanks to our speaker, both the speakers who have spared valuable time for us, and CA Dr. Rajkumar Adukia sir for choosing so wise topics, and the whole technical committee for this smooth flow of VCM. Thank you to all the 1400 attendees, and I am sure we all have been benefited from this. With this remark, I once again thank you all for being a part of this webinar. Thank you once again.
Thank you to all. Thank you.
Thank you. We close the webinar.
Thank you.
Yeah.
Okay.
Bye.
Bye.